Good morning, Facebook community and YouTube community. I'm here with Brian Lehow. I'm Jennifer Noreen. Hello, Brian. How are you?
Good morning. I am doing wonderful. Thank you. How are you?
I'm good. So, Brian, what is it you do again? Just remind us all.
That's a good question. No, I'm a CPA. I work with we do primarily tax work in businesses as well as individuals. We help reduce their tax liabilities and take advantage of the rules and the laws that are out there and like I said, help save them money. That's the biggest thing. That's my biggest goal. Keep them organized and help save money come tax time.
Yes, and we support you with meeting those goals of saving us all money. I like that. I like that goal. So, you help individuals and businesses. So, how
Correct.
does that split up in your business? I have people actually ask me this about you
Yeah.
when I'm talking about you in the community. So, can you help me
Yeah.
answer that?
No, it's a great question. I mean, businesses are essentially run by individuals, right? And they're owned. Many, or just about all small businesses have very few owners. And so what we do is we work with that business and get them going and organized and making sure that they're doing what they're supposed to be doing with the state of Washington and with the IRS. And then that flows through into their individual situation. And so really I mean, they're one and the same. They really are. But I mean, we do have clients that we take care of the business, but not the individuals, and vice versa. So I prefer to have the entire vision of everything. So we know if we make a decision on the business end, it's not going to affect the individual side negatively, and vice versa. So, but yeah, and then we have individual clients who don't own businesses as well, and so we help them with their tax situations, and yeah. So anything else that we can help them with. So yeah.
Got it. So it's a combination. And
Mhm.
you are a Gig Harbor resident, but you live in Federal Way and you work with
Other way.
clients between.
The business is in Federal Way. So sorry.
Did I say
Yeah,
the opposite?
yeah,
Oh
you're
my
good. No, I live in Gig Harbor, but yeah, my office is in Federal Way. So
God.
yeah, I'm
I need more
everywhere in
coffee.
between.
I
So
need
no,
more
you're
coffee.
yeah, exactly,
And
exactly.
you have clients between Lacey and North Thurston, or do you even go
Yeah,
that far north? Or
a little bit, a little south. We go into. I mean, we have some clients in Olympia, Lacey, and then as far north, we've got some in Seattle. But it's really kind of up and down the I-5 corridor between Gig Harbor to Tacoma to Federal Way and Auburn, those areas primarily. But yeah, I just picked up a brand new client in Park City, Utah. So it really we
oh
can
my
service
goodness.
we can
Yeah.
service
Well,
pretty much anywhere.
in the world of Zoom, are you allowed to practice on Zoom as a CPA?
Sure. I mean, I think the as long as we're licensed to practice with the IRS and
Mhm.
with the state that we're located, that's the key. So, and then yeah, we've got clients all over the country that we work with. I've got clients in Texas and Arizona, and like I said, we just picked up a brand new client in Utah.
Mhm.
So yeah, we're able to function. And Zoom actually really makes it a lot easier to connect with those clients rather than just relying on phone calls and mail and email and things like that. It really
Yeah.
gives a better connection with those clients. So, and
Yeah.
that's huge. So,
I
yeah,
would think so. I would think
yeah,
so. Well,
yeah.
today we wanted to talk about child tax credit. We have a new blog post on ospreycpa.com about the child tax credit that we published a few weeks ago.
Hmm. Hmm.
And we just wanted to kind of follow up with that topic and address questions that we know people have. And I know you've been talking to people, so you know what these questions are. So I guess the begging question, the first question is, how is the child tax credit affecting people's change? How is it affecting people's taxes? What is the
Yeah,
change?
yeah. And they've put in an advance payment for 2021, and this is only for 2021 right now. So people are receiving 250 or potentially $300 a month per child um, throughout the year. And so that's really, like I said, it's an advance payment. So it's a credit that they get at the end of the year,
Hmm.
but they're essentially just paying it out through the course of the year to taxpayers to just kind of spread that out and give them a little bit of a cash infusion if they indeed choose to take it. So yeah.
But is it really truly money they are not going to be accountable for? Because that seems to be a little bit of a trick there. So can you
Yeah.
explain that?
No, that's a great point. It really does. It's a credit that they're going to get at the end of the year. So if they get $2,000 at the end of the year, normally whatever they get throughout the year in advances, it reduces that amount of the credit at the end of the year. So it's really just moving the credit from the end of the year to now. So there will be cases where people will have to pay it back if that indeed affects their tax liability at the end of the year, to be able to, that they would normally like receive a refund of a small amount, but now since they took those advance credits, they actually owe money at the end of the year. So yeah, it's a
Wow.
little,
Okay.
it's a tricky situation. I think the intention's good, but it's a tricky situation.
So
Yeah.
the intention is probably for families who are coming out of COVID and are strained,
Sure.
and it's the administration's way of saying, "Hey, here's a cushion for you. Eventually, you
Exactly.
will need to pay it back, but here's some, money infusion." So, and who is it impacting? Is it all parents with all children, all ages, or what is the scenario there?
Yeah, it's actually kind of spread out. If children, I think it's 5 and under now, are eligible up to, I think, $3,600 a year for the
Mm-hmm.
child tax credit. Ages 6 to 17 are now eligible for $3,000, and so that those are increases over 2020. But again, that credit is an amount that's being reduced by those advance payments. Um, so yeah, it's impacting
I
mostly
see what
families, and
you're
there are
saying.
some, yeah,
Yeah.
there are some adjusted gross income limitations. I think it starts to phase out and change at 150,000 for married couples, or for married filing jointly, and then it goes down from there. It starts reducing from there. So it impacts a lot of, I mean, a good handful of my clients, especially probably about 50% of my clients have dependents in those ranges, and so yeah, it's definitely impacting a lot of people. Yeah.
Mm. Okay.
Yeah.
And if I want to opt out of it, why would I want to opt out of it if I have children and expenses affiliated with children? Why would people opt out?
Yeah, that's a great question, and it's fair because I'm actually, it is definitely situational, but I tend to lean on the side of opting out for people if they really don't need that extra income each month. So if they're not having to rely on that, I'm advising most people to opt out, because one, we just don't know at the end of the year what that tax situation is going to be. So are you putting yourself in a situation where you're going to have to pay that back in April,
Mhm.
or I mean, if maybe it just reduces the amount of their refund, so that's okay too. But it's really that unknown, I think, right now
Mhm.
of okay, what kind of situation are you putting yourself into if you don't necessarily need it? If you need it, by all means, please. And so so that's one thing. And then another is, I'm actually seeing, I've got quite a few questions on this, is well, we have got a family that just went through a divorce or a split, and so now, okay, who gets the advance payments? They're still kind of deciding that, who's gonna end up with that. And so if the advances go to the wrong parent that doesn't get to claim that child in April,
Oh,
then
wow,
that
yeah.
parent will have to pay it back. So yeah,
Yeah.
it's there's a lot of question marks around it. And then the last thing is the tracking and the paperwork. Just looking at 2020, for example, with our clients and the stimulus payments, I mean, it's amazing how easy it is to lose track of, oh, I don't even remember what I received, and things like that. So, but we have to make sure that that's being tracked very carefully, so we can claim the correct amounts in come April, and then when things get filed for 2021. So it's going to be a mess from a paperwork standpoint, and there's going to be
Mhm.
a lot of tracking down information. But yeah, so those are kind of my main thoughts around why opting out might be a better situation. So yeah.
So we're talking about the child tax credit. It's something that affects 2021 taxes. It sounds really good up front, but it might be something to think through, because you have to, in the end, pay the piper, so to speak.
Yeah,
And unless you just really urgently need cash inflow, it sounds like something to pass on, is what your opinion is.
potentially, yeah, and it's every
Yeah.
situation is different, but yeah, that's where I tend to lean, is
Yeah.
if you have a choice, it's probably, I would say, opt out. But
Right.
yeah, everyone's different, every situation's different, but you're
Right.
still going to get credit for it, but it's just gonna be at the end of the year. And so
Right. Got it.
yeah.
Okay. And so if you want to know more, read more details, there's a blog post on Brian's site, ospreycpa.com. And what if I want to talk with you about it because I'm not sure what I want to do? What should I do, Brian?
Yeah, reach out. We've got a contact page on our website as well, info@ospreycpa.com. We'll answer any questions, and then our office number as well. We're always happy to talk with new clients or potential clients, or just even people with questions. And I love helping people, and so if people have questions, I'm generally willing to answer them if I'm able to. So yeah.
Yes, and Brian is a good CPA. He's helped me, and he's very available. And sometimes I think he's probably too available when he's working. But your family's probably used to that. It's kind of crazy. Are there any other weird or different changes going on right now, or is child tax credit kind of the thing right now?
Well, there's a lot of talk right now about some changes, and I mean, usually with new administrations, there's generally changes to the tax code. That's pretty standard,
Mm-hmm.
and the biggest one, other than the child tax, is probably the capital gains. Talk about capital gains tax and increases there, and what's covered, what's
Mm,
not.
yeah, changes.
So it's going to be a very interesting planning season. I'm encouraging clients to come in earlier for tax planning in the year, rather than maybe not waiting till October, November, like our normal course of our year goes, but
Mm-hmm.
trying to get ahead of that, and planning for those changes is going to be really, really important as they start coming through the through Congress, and being becoming law. So, yeah.
Yeah, so if you need a list of deadlines or taxes that are relevant to you as an individual or business, there's a page about that as well on Brian's site. So if you have questions, contact him or visit the site, and you can fill out the contact us form. That's another way you can get a hold of Brian and his staff. Well, thanks, Brian. Always interesting to speak with you about things that I know very little about. So I'm always the classic, what? What does that mean?
Yeah,
Um,
my
so,
pleasure. Always a pleasure. Yes.
yeah, no, I appreciate it. All right. Well, thanks, Brian. Have a good rest of the week.
Thank you. You as well.